Hello, this is Michael Kramer, Mock Capital. Today is Tuesday, July 15th, and it's around 4 p.m. New York time. So economic data on July 16th will really be featuring around PPI data. This will, of course, be following the data on July 15th for CPI, which came in basically in line to slightly hotter than expected. It wasn't an overall concerning number, although there was some indications that goods inflation was starting to pick back up again here in the U.S., which shouldn't really be much of a surprise given that we have these tariffs now in place. Now, the data for July 16th will feature the PPI, which is basically we're looking for a slight downtick in the year-over-year number, 2.5% from 2.6. But month-over-month data is expected to accelerate to 0.2 from 0.1. Then on the 17th, we'll be looking at initial jobless claims. Again, this has been a number that the market's been focused on. Number has been showing signs of coming down a little bit. So 235,000 versus last week's 227,000, while continuing claims are expected to come in at 1.965 million, which is in line with last week's numbers. Also on the 17th, we're expected to get retail sales. We're looking for 0.1%. That would be stronger than of a negative 0.9%. And then on the 18th, we'll be looking for University of Michigan. These will be July preliminary readings. There has been a lot of stuff going on in the marketplace, though, when it comes to the dollar specifically. It looks like all of a sudden, I think we started talking about this last week, this broader trend change that we've been seeing in the dollar. We can see that more recently, specifically versus the euro, the uptrend in the RSI is now clearly broken. And it looks like the uptrend in the price has also been broken, falling below the uptrend, also falling below support today around 116.70. That does set us up for a potential reversal back down to 114.7 as well. I mean, there's always a chance here that we could rebound it and move back up and perhaps retest the breaking of this uptrend. And that would probably take us back to around 117.1 or so. But again, when you look at the RSI in combination of some of the other major currencies we're looking at, it looks like the dollar is probably due to go through a period of strengthening here. So at this point, also like with the euro, it's looking like we could see the pound continue to weaken. I don't think we should rule out a potential return all the way down to around 130.80 or so. It certainly seems viable if you're able to take out the lows on the 15th around 133.66. When we move over to yen, very similar look. You can see that we've moved up above resistance at 148.5, and it looks like we're also potentially positioned here to see the yen weaken up to around 151. We are starting to see the RSI creep up to around 70 or so, and we are getting a little bit overbought. So it is possible that we see the yen consolidate here a little before we see a move higher, but it's looking like there has been a major shift in the market sentiment towards the dollar. And right now it seems that we're looking for the dollar to continue to strengthen. When we look at gold, this is an interesting setup still because we haven't really seen gold break down, but we haven't really seen it move higher. It's starting to look like there is potential for gold to move lower. In fact, here's your uptrend. That's very close to breaking. Here's horizontal support at 33.25. That's very close to breaking. RSI clearly trending lower. That's very close to telling us that momentum has shifted. And if you want to get a little creative, I guess, with the charting, you could make a case and say that maybe a bear flag has even formed in gold, and we're looking at a potential move lower from here. Potentially, we could be looking at a move and a reversal back down to around 3,200. Again, for this to happen, I think you're going to have to see the dollar also continue to rally, and you're also going to have to see the dollar continue to move up. When we look at Brent, that's had some really strong support and resistance around 70.5. That level has acted as resistance more recently, but I think it's important to note that you are seeing that there is an uptrend in Brent right now, and that would suggest that we could potentially see prices continue to move higher. RSI is really not giving us any good indication on anything at this point, although there also does appear to be an uptrend in place here as well. And as long as we continue to try to hold on to the 10-day exponential moving average, I think we have to still favor that oil can continue to move higher. We've seen the DAX really give mixed signals the last couple of weeks. We have been trading lower, and it looked like we were getting close to potentially breaking in a meaningful way. Then we had a nice reversal higher. We tried to take out the highs, but you can see that we really weren't successful. We've now come back down and are slipping and falling below the 10-day exponential moving average. So it's looking like we could be forming some sort of double top, maybe a 2B topping pattern, which is when you try to take out the previous highs, but you're not able to hold them and you give them back very quickly. This is obviously a very important reversal pattern. It's very easy to invalidate as well. All you would need to do is basically close above, this 24,500 area, and that would tell us that this reversal pattern is no longer. But as long as you continue to remain below this 24.5 area, it would suggest that there's an opening of potential to return to 23,060. And when you look at the DAX from another perspective, I mean, momentum has, clearly shifted, and you are getting a bearish divergence. Notice that the price and the high on the RSI came on May 21st. That saw an RSI top at 71.80 while the DAX closed at 24,122. Then your next high came on July 9th when the RSI topped at 64.45 while the DAX closed at 24,550 or so. So that's your classic bearish divergence. And that would kind of give you the idea that this is setting up nicely for some sort of bigger reversal that would underscore and potentially fall below this 23,000 level over the longer term. The FTSE also has been moving up, which is not really surprising. We talked about how the FTSE tends to trade with copper prices, and so we got the big move up in copper, and the FTSE eventually, the FTSE just followed. So right now, I think the FTSE is probably one of the easier markets to trade at this point, probably because all it's doing is trading along with the price of copper. And if copper prices are going to settle in, if COMEX copper is going to settle in, then it's likely that the FTSE is going to settle in. And if we start seeing copper prices coming down, then it's very well that you could see then it's possible you could see the FTSE return to this 8,800 level. When you look at the NDX has been broadly trending higher. It had opened higher today by quite a bit and gave back a lot of those gains by the day's end, finishing up just 13 basis points. You can see that the NASDAQ is basically trending higher. Here's our 10-day exponential moving average. That continues to be our support level. Bollinger Band's really not in play. You really can't say that we're too overbought at this point in time, although you are starting to see momentum fading on the RSI, so that's always a indication potentially we're putting in some sort of topping here. But really, until you break this 10-day exponential moving average, which comes around 22,709, there's really not much to say. Obviously, if you were to break below this level, we could look for a gap fill and a return back to this 21,830 area. That would take us back below the previous highs we saw at the end of 2024 and the beginning of 2025. That would probably be pretty important if you were to see that happen. It could really kind of suggest that maybe this breakout here is false, and really you'd want to pay attention in the form it happens. If you were to get let's say a gap lower over the next couple of days, maybe below this support level, that could set up an island reversal top. And so you'll want to watch to see, number one, do we fall below the 10-day exponential moving average? Do we fall below support at 22.6? If we fall below support below 22.6, does it happen on a morning gap? If it opens on a morning gap like that, that really sets up potential for a revisit not only to 21.8, but perhaps something a little bit steeper. When you look at the S&P, a very similar setup here, and you can see we're closing just a little bit above the 10-day exponential moving average. This again continues to be the main level of support. What I have drawn in here is a rising wedge pattern. I mean, it's not unusual to see a rising wedge type pattern have a throw over and then come back through it. But this seems like it would be kind of unusual because this seems like a really long time to be above the rising wedge pattern. I mean, typically 2, 3, 4 days, and then you'll come back down. That hasn't been the case. We've been up here really since, call it June 26th, so a couple of weeks now. But there's always the possibility that there was, some sort of corrective pattern in here. Also notice that today we tried to take out these prior highs and also failed to do it. So something to keep an eye on. Again, I would just watch the 10-day right now. Until the 10-day breaks, you have to assume the market goes higher. But once that breaks, then you can start looking for lower levels. And more importantly, once that 10-day breaks, is that 10-day now acting as resistance? And that will also tell you a lot about what the direction is going to be. The Dow looks a little bit weaker. Here you can see the Dow. I mean, basically it got up to resistance here on July 3rd, and it hasn't really come back now. Now we close today below the 10-day exponential moving average. You're going to want to see a 43,900 holds. If that doesn't hold and you start moving to the downside, then I would be looking for a move back to 42,808, which would take us back to really where we were towards the end of June. But obviously, this is also a kind of interesting setup longer term with your potential triple top pattern on the Dow, which is something you don't see very often, if ever. So anyway, have a great week, and we'll see you next. Bye.